Hey, everybody. Thanks so much for joining me today. This is Jeff Trevarthen, Jeff the Mortgage Pro. I've got a good one for you today. And what we're doing is we're comparing FHA. When is an FHA loan better than a conventional loan? And in this analysis, what I've done here is I've done these two loans side by side. Let's jump right into it and take a look at it. So, over in the summary section, you can see that we have a conforming purchase or conventional purchase at 5% down with a 640 credit score. And then the next column over is an FHA purchase, 5% down with a 640 credit score. In both of these instances, we're comparing a $500,000 purchase price with a 5% down payment. And the reason why I'm doing that is so that we can compare apples to apples. FHA has a minimum down payment of 3.5%, whereas a conventional conforming loan typically has a minimum down payment of 5%. And in some instances, you can do 3% down conventional loans, but that's for another video. We won't get into that. But in order to compare both of these together, let's do a 5% down in both instances. So what's crazy is that when you have a lower credit score, like a 640 credit score, the interest rate on conforming loans goes way up because it's very credit dependent when you're doing a conforming or conventional loan. So in this instance, you can see that we're clear up at 7.625% for our interest rate, and our monthly payment with principal, interest, taxes, insurance, and mortgage insurance ends up being $4,417, and our cash to close is roughly $28,965. Now compare that to the FHA purchase at 5% down with a 640 credit score. A FHA loan is not as credit dependent as the conforming conventional loans are. So that's awesome. So especially if you have a lower credit borrower or you have a little bit lower credit as a home buyer, then you may want to look into an FHA option in some instances. Okay. Now, the reason being that the loan amount is higher here is because FHA loans have what's called upfront mortgage insurance. And 99% of the people that I have with FHA loans, what they do is they roll that mortgage insurance, upfront mortgage insurance, into the actual loan itself. So you can see the loan amount goes up in this instance. That's why it's not highlighted, but it is higher than the 475 loan amount. So 6.25% interest on this. Our monthly payment for an FHA purchase with 5% down at a 640 credit score is $37.53 per month. That's a huge savings. That's $664 less than the monthly payment on a conforming conventional purchase with 5% down. So this one is a no-brainer in this instance. If you have a single family property that you're buying and you have a lower credit score, you're probably going to want to go the FHA option as long as you can meet the minimum qualifications to go forward with this particular loan. Let's look at the rest of the analysis. Over on the right-hand side, you can see the monthly payment difference is $664.31. The savings you would have over the first 5 years of this loan are $39,039 using the FHA loan versus the conventional conforming loan. And then the interest and mortgage insurance that you would pay over the first 15 years is significantly lower on the FHA purchase, $439,120 versus 575, 574. So where's the big discrepancy in monthly payment here? Obviously, we know that some of the discrepancy is with the rate, but if we click on the more info button with the three dots next to it, you can see that the principal and interest payment is about 300 and some dollars better with the FHA purchase, and that's obviously because of the spread in interest rate. But you'll notice that there's a big difference in the mortgage insurance that's associated with this particular loan. So when you have bad credit on a conventional loan, it really, really impacts the mortgage insurance. And you can see that in this instance, $475 a month is how much mortgage insurance you have to pay on a conventional conforming loan with 5% down and a 640 credit score. Whereas FHA is not as credit dependent, so it doesn't matter as much. So it's still the same with a 640 credit score for mortgage insurance as it is with a 780 credit score with an FHA loan. So we're not worried about the mortgage insurance in this instance. It ends up being $196, and that's where you can see the big change in monthly payment on this particular type of loan. So if you're a borrower out there and you're looking for a loan across the country, I would hope that you please reach out to me. You can click on the link down below for my Calendly, and that'll get you on my schedule. We can have an appointment. I'd love to chat with you about your next purchase, and hopefully I can help you out. Thanks so much for watching today, and I look forward to chatting with you again really soon. Have a good one.